What if I told you that the next big move in silver will not begin with excitement, but with fear? What if the market is preparing for a moment so emotional, so confusing, that even long-time silver holders could begin to panic at exactly the wrong time? Today we are going to talk about why 99% of silver stackers may soon face one of the most difficult emotional tests of this entire cycle. Welcome back to Pulse of Silver, the channel where we break down the biggest stories, hidden signals, and market trends shaping the future of silver. If you care about protecting your wealth and understanding where this market could go next, make sure you stay with us until the end, because what is happening right now could change everything for silver investors in 2026 and beyond. For years, silver stackers have been preparing for a major breakout. Many believed the move would happen quickly after inflation exploded, after central banks printed trillions, or after global debt reached record highs. But instead of an easy rally, silver has continued to frustrate investors. Prices have moved up and down violently. Every breakout seemed to lose momentum. Every rally created hope, only for the market to suddenly pull back again. And now something dangerous is beginning to happen inside the minds of many investors. Exhaustion is replacing patience. This is how most major market moves begin. Before a huge breakout happens, weak hands usually get shaken out first. The market tests people emotionally. It creates doubt. It creates frustration. It creates fear that the story was wrong all along. History shows that precious metals often move in ways that make the largest number of people uncomfortable. During previous commodity bull markets, investors who sold near emotional lows later watched prices explode higher without them. Right now, silver is sitting in a very unusual position. Industrial demand continues growing because of solar panels, electric vehicles, artificial intelligence infrastructure, and energy transition projects. Governments around the world are pushing massive electrification programs, and silver remains one of the most important metals in that system. At the same time, mining supply is struggling to keep up. Many analysts are warning about long-term supply deficits. Physical silver inventories in some markets are becoming tighter, while demand from retail investors remains surprisingly strong despite price volatility. But even with all these bullish fundamentals, the market continues to behave in a way that confuses investors. Why? Because modern financial markets are driven not only by supply and demand, but also by liquidity, interest rates, derivatives trading, and global risk sentiment. When fear enters the broader financial system, silver can temporarily fall alongside other assets. That is the part many stackers are emotionally unprepared for. Imagine silver suddenly dropping hard during a broader market correction. Imagine headlines everywhere claiming the silver bull market is dead. Imagine social media filled with panic and disappointment. For many investors, that could become the breaking point. After waiting for years, some may finally give up. But historically, those moments often appear near major turning points. The biggest wealth transfers in markets usually happen when emotional investors sell quality assets to patient investors during periods of fear. Silver is especially famous for this behavior because it is one of the most emotionally volatile markets in the world. It can rise extremely fast, but before those moves happen, it often creates deep emotional pain first. And that is why the next few months could become so important. Not because silver is weak, but because investor psychology is reaching a dangerous stage. The people who survive this phase may eventually benefit from what comes next. But the people who panic at the wrong moment may miss the very move they have been waiting for all along. One of the biggest reasons silver stackers may panic soon is because many entered this market expecting a straight line higher. Social media influencers, bullish headlines, and aggressive price predictions created the belief that silver would immediately explode once inflation started rising. When inflation surged globally, many expected silver to instantly reach $50, $100, or even higher. But markets rarely reward the majority that easily. Instead, silver entered a long period of volatility. Prices moved sharply in both directions. One week looked extremely bullish and the next week looked bearish again. This constant uncertainty slowly damaged investor confidence. Many stackers who once felt excited began asking difficult questions. Why is silver not moving faster? Why does gold sometimes outperform silver? Why do central bank policies continue affecting the market so heavily? The answer lies in understanding how silver behaves during different economic environments. Silver is both a precious metal and an industrial metal. That creates a unique situation where silver responds to inflation fears, industrial demand, interest rates, and economic growth all at the same time. During periods when recession fears rise, investors sometimes worry that industrial demand could slow down. That can create temporary price weakness even when the long-term picture remains extremely bullish. This is where emotional pressure becomes dangerous. Most investors are comfortable buying when prices rise and headlines are positive. Very few feel comfortable holding during uncertainty. Yet some of the greatest investment opportunities in history appeared during moments when confidence completely collapsed. There is another important factor most people are ignoring. Large institutional money often waits for retail investors to lose confidence before aggressively entering a market. Big money understands psychology better than most individual investors. Institutions know that emotional exhaustion can create ideal buying conditions. If retail stackers begin selling out of frustration or fear, stronger hands may quietly absorb physical silver at discounted prices. At the same time, global financial risks continue building beneath the surface. Debt levels remain historically high. Governments continue spending aggressively. Currency purchasing power continues declining over long periods of time. Geopolitical tensions remain elevated across multiple regions. Banking systems still face structural pressures from higher interest rates and slowing economic growth. All of these conditions historically support precious metals over the long term. But here's the problem. Markets do not move based only on logic. They move based on emotion, liquidity, and timing. Even if silver's long-term direction remains bullish, short-term volatility can still become brutal. And if another sharp correction appears before a major breakout, many stackers could emotionally break down. This is exactly why experienced precious metals investors constantly talk about patience. Silver has a history of shocking both bulls and bears. It can stay quiet longer than expected, then suddenly move with unbelievable speed. Some of the largest silver rallies in history happened after periods when investors felt the most hopeless. Right now, the market feels trapped between two competing forces. On one side, rising industrial demand and global financial instability support higher silver prices over time. On the other side, tight monetary policy, market uncertainty, and investor frustration continue creating short-term pressure. That conflict is building emotional tension across the entire silver community. And when emotional tension becomes extreme, panic often follows. The question is not whether volatility will continue. The real question is who will still be standing when the next major move finally begins. There is something else happening in the silver market that many people are failing to recognize. The physical silver market and the paper silver market are behaving like two completely different worlds. On paper, silver prices can be pushed around rapidly through futures trading, derivatives, and large institutional activity. But underneath the surface, physical demand continues telling a very different story. Across many parts of the world, investors are still buying physical silver aggressively. Coin dealers have reported strong demand during price dips. Many stackers are using lower prices as opportunities to accumulate more ounces rather than leave the market entirely. This creates an interesting contradiction. Public sentiment may appear weak online, but physical accumulation continues quietly behind the scenes. This disconnect between paper pricing and physical demand has frustrated silver investors for years. Some believe the market is heavily manipulated. Others believe silver is simply misunderstood and undervalued compared to gold and other commodities. Regardless of the explanation, one thing remains clear. The emotional battle inside this market is becoming more intense. What makes silver unique is how violently it can react once momentum finally changes. Silver is a relatively small market compared to stocks, bonds, or even gold. Because of that, when capital flows into silver aggressively, prices can rise extremely fast. This is why some analysts continue warning that silver could eventually experience a major supply shock if investment demand and industrial demand collide at the same time. Imagine a situation where industrial users desperately need silver for manufacturing, while retail and institutional investors simultaneously rush into physical metals because of financial instability. In that environment, available supply could tighten rapidly. Premiums on physical silver products could rise sharply, delivery concerns could increase, and suddenly the same investors who once panicked during price weakness might begin chasing the market higher out of fear of missing out. That emotional cycle happens repeatedly in financial history. Fear pushes people out near bottoms. Excitement pulls them back in near tops. Very few investors manage to control their emotions during both phases. Another reason silver stackers may soon panic is because expectations have become dangerously emotional. Some people entered silver expecting instant wealth. They expected the system to collapse overnight. They expected silver prices to skyrocket immediately. But real financial cycles often take much longer than people expect. The longer a market delays its breakout, the more psychological pressure builds on investors. This pressure becomes even stronger when other assets appear to outperform temporarily. If stock markets rally while silver moves sideways, frustrated investors may begin questioning their decisions. Some may rotate into risk assets at exactly the wrong moment. Others may abandon precious metals entirely after years of waiting. But long-term market cycles are rarely obvious in real time. Many of the greatest bull markets look disappointing and frustrating before entering their strongest phases. Gold itself experienced massive volatility before eventually reaching historic highs in previous cycles. Silver has followed similar patterns throughout history. The real danger for stackers right now may not be price weakness alone. The bigger danger could be emotional surrender. Once people emotionally disconnect from an investment story, they often stop paying attention right before the biggest move arrives. And that is why the current environment feels so important. We may be entering the final emotional test before silver's next major chapter begins. Whether that chapter becomes explosive or disappointing will depend on global economics, investor psychology, and physical supply conditions. But one thing is certain. The investors who stay emotionally disciplined during chaos often end up in the strongest position when markets finally turn. As we move deeper into 2026, several powerful forces are starting to collide at the same time. Inflation pressures may no longer dominate headlines every single day, but the deeper problem has never truly disappeared. Governments around the world continue carrying enormous debt burdens. Interest payments are rising, economic growth remains fragile in many regions, and central banks are facing an impossible balancing act between controlling inflation and preventing financial instability. This matters for silver because precious metals often perform best during periods of declining trust in financial systems. If investors begin losing confidence in paper currencies, government debt markets, or banking systems, hard assets like silver can suddenly attract massive attention. But once again, the path toward that outcome may not be smooth. One major risk facing silver stackers is the possibility of a temporary liquidity crisis. During severe market stress, investors sometimes sell whatever they can to raise cash quickly. We saw similar behavior during previous financial shocks when even gold and silver initially sold off alongside stocks. That type of move can create panic because it feels completely irrational. Investors expect precious metals to protect wealth during crises, so when prices initially fall, many become confused and emotional. But historically, those sell-offs often became temporary phases before much stronger rebounds appeared later. Once central banks respond with stimulus, liquidity injections, or lower interest rates, precious metals can regain momentum rapidly. The challenge is surviving the emotional chaos before that recovery begins. At the same time, industrial demand for silver continues growing quietly in the background. The green energy transition remains heavily dependent on silver usage. Solar technology requires large amounts of silver. Advanced electronics require silver. Artificial intelligence infrastructure, data centers, and electrification projects all increase long-term demand pressure. This creates a powerful long-term foundation that many short-term traders ignore. If supply deficits continue growing while industrial demand expands, silver may eventually face a structural imbalance that becomes impossible for markets to ignore. Some analysts believe that once this imbalance becomes fully visible, price discovery could happen extremely fast. In simple terms, silver may eventually need much higher prices to balance supply and demand conditions. But before that happens, emotional volatility could still shake out huge numbers of investors. This is why the title of this video matters so much. 99% of silver stackers are not necessarily about to panic because silver is failing. They may panic because the emotional pressure becomes too difficult after years of waiting, volatility, and uncertainty. Markets are psychological battlefields. Patience often feels hardest right before conditions change. Fear often becomes strongest near turning points. And in precious metals markets, emotional swings can become extreme because the asset itself represents distrust in the financial system. When confidence in the economy rises, silver can feel forgotten. When fear returns suddenly, silver can become one of the hottest assets in the world almost overnight. This is also why experienced investors constantly focus on risk management and emotional discipline. No market moves in a straight line forever. Even the strongest bull markets experience corrections, fear, and temporary collapses in sentiment. The investors who survive are usually the ones who prepare mentally for volatility before it arrives. Right now, the silver market appears to be entering one of those critical emotional periods. Some stackers may give up. Some may panic during corrections. Some may lose confidence completely. But others may view this environment as the final accumulation phase before much larger moves develop later. And if history repeats itself, the market will likely reward patience long after most people stop believing in the story. As we close today's discussion, one thing should be very clear. The silver market is not just a battle of economics. It is a battle of psychology. The next major move in silver may not begin with celebration or excitement. It may begin with fear, confusion, and panic. That is often how markets remove weak hands before larger trends emerge. Right now, silver stackers around the world are facing enormous emotional pressure. Years of volatility, delayed breakouts, and constant uncertainty have exhausted many investors. Some are beginning to question whether silver will ever deliver the move they expected. Others remain convinced that a historic breakout is still ahead because of growing debt, weakening currencies, industrial demand, and tightening supply conditions. The truth is that nobody knows exactly when silver's next explosive move will happen. Markets are influenced by countless factors, including central bank policy, global economics, investor sentiment, industrial demand, geopolitical events, and liquidity conditions. But what history repeatedly shows is that silver can move with incredible speed once momentum finally shifts. This is why emotional discipline matters so much. Investors who panic during volatility often sell at the worst possible moments. At the same time, blind optimism without risk management can also become dangerous. Successful long-term investing requires patience, balance, and understanding that markets rarely move according to public expectations. For silver investors, the coming months may become one of the most important emotional tests in years. If volatility increases, fear headlines dominate the news, and prices swing violently, many people may finally give up on the silver story entirely. But if underlying fundamentals continue strengthening beneath the surface, that same environment could eventually become the foundation for a much larger move later on. One thing is certain: the silver market is entering a fascinating period. Industrial demand continues expanding, financial uncertainty remains elevated, supply concerns continue growing, and investor psychology is reaching extreme levels. These are often the kinds of conditions that create major turning points in markets. Whether silver explodes higher soon or continues frustrating investors for longer than expected, the emotional battle happening right now is real. The people who understand that reality may be better prepared for what comes next. Because in the end, markets are designed to test conviction before rewarding patience. Thank you for watching Pulse of Silver. If you enjoyed this analysis, make sure to like the video, subscribe to the channel, and turn on notifications so you never miss the latest updates on silver, precious metals, and global financial trends. Let us know in the comments whether you think silver stackers are close to panic or close to the biggest breakout in years. This video is for informational and educational purposes only and should not be considered financial advice. Investing in silver and precious metals involves risk, and prices can be highly volatile. Always do your own research and speak with a qualified financial advisor before making any investment decisions. The views expressed in this video are based on market analysis, public information, and personal opinion, and there are no guarantees regarding future price movements or market outcomes.